Hey friends, good to see you. Welcome to this AMA. It's really good to see everybody here. Lots of people joining now, which is cool to see. Hi everybody. My name is Mike Supervici. I am the head of acceleration here at Desol Group. For those of you that don't know, or if this is your first time joining us for an event, Desol Group's a company whose entire purpose is to help new and emerging managers thrive. Okay, we do this in a number of different ways. We do this through the VC Lab Accelerator, which we're going to spend the next hour basically discussing. Um, we have a product called Desol Hub that everyone in the VC Lab Accelerator will get to use, which has effectively become more or less the operating system for modern venture capital. We have an entire back office suite and solution called Desol Partners, and um, we also have a fund of funds, right? So with every step, everything that we do, we sort of try to clear the way for new and emerging managers to thrive. Okay. And what I wanted to do today is answer your questions with regards to the VC Lab Accelerator, what it is, how it works, everything that you sort of need to know about it. Okay. And the format of the session is going to be as follows. If you see on the right-hand side of your screen, there's like a little chat button. I see some of you are introducing yourself. Continue to do that. But there's also a Q&A button right below it. So if you have questions about the program, about what it is, how it works, that kind of thing, throw your questions in there and I will take a look at this and I will answer questions. So I'm going to go ahead and answer your questions about the program for at least a half an hour. Then what we'll do is we're going to, you know, come off the screen here, and then you'll see a set of tables. And in those tables, I'm going to go into one of those tables. Other members here might also as well, and you can also meet other people who are here on the call. You can ask me more questions by sort of unmuting and things like this. But I'm sure that there's a lot of questions that people have that you'd like to know, and so I'd like to sort of answer as many questions as I can over the group, just because these tables tend to have a limitation of the number of people that can be on them. Okay. And so, of course, we're going to do the tables later, but let's go ahead and start getting your questions in about the VC Lab Accelerator while I go ahead and kind of give you a little bit of an overview about what it is. And then I'm happy to go into sort of details. Okay. So, VC Lab Accelerator, it's basically think of it like a 14-week structured program to help you launch your fund. What does it mean to launch a fund? It means, you need to do a closing. Okay, you need to close. It's a closing program. It's not a learning program. This is not the place to come learn about venture capital. This is a place to launch an enduring venture capital firm. And this is for people that are founders, right? Founders of VC firms versus, like just people that want to kind of learn about venture capital. If you just want to learn about venture capital, we have a program called the Venture Institute. We run that three to four times a year. And it's all like sort of like the basics of venture capital, how it works. It's really more optimized to help people get jobs into venture capital. VC Lab, our kind of like flagship program, it's built specifically to help effectively founders of venture capital firms launch the next generation venture capital firms. We like to call internally them as the future Hall of Famers. Okay, if you just think about like the venture capitalists that you probably admire today, they all kind of started where you are here. Okay, except that they had it harder just because there was no kind of ecosystem, there was no structure. There was nowhere to sort of ask questions and things like this. And this is basically what the VC Lab Accelerator kind of does. It demystifies the whole process. Every single week, you're going to have a set of sprints. Do this, and that. It's packaged in a way that helps you achieve those results faster. Because we're in cohort 15 now. Okay, so we've been iterating on the curriculum, on the program, on the system, on the tools. For 15 cohorts now. And so just to kind of give you a sense of like the results, a lot of people sort of get caught up in like the top line numbers. And for those of you that haven't been to our website, we've launched over 450 firms, yada, yada, yada. It's all global, 66% outside the United States. So this works everywhere. But the most important thing is that, if you're starting a fund right now, the average person takes roughly about 2 years to get to like a closing. Okay, maybe a year and a half if things go right, but it's usually 2 years. The people that go into the VC Lab Accelerator, they generally close within 4 to 5 months. Okay, and the reason that this is working, it's not because of rocket science. It's not like we figured out some like magic thing here. It's because we package things correctly at the right time. A lot of people, when they start venture capital firms, they do things out of order. So what's that? What does that mean? For example, a lot of you here on this call have probably already started wasting your time talking to lawyers and vendors about like kind of how to power the operation of this fund that you don't have. And that's usually a major, major mistake. It's a major mistake to engage with a law firm before you have enough hard circled from limited partners to actually know that the fund is viable. Another thing that people do is that they start building out materials like decks and things like that before you have a thesis that is resonating with limited partners. Like you should be able to get hard circled, signed letters of intent from limited partners just based on a verbal pitch with no materials whatsoever. Okay. That's when you know the thesis is viable. Why is this important? Why is it important that you do this in this order? Well, because all a deck is, for example, is all it is an extension of your thesis. If your thesis is broken, your deck is broken, all of your materials are broken, you're going to not convert LPs, right? And this is why people have to sort of go back to the drawing board and all this stuff. And this is why it takes like 2 years to usually close, right? So we've packaged everything correctly using almost like an entire curriculum. You have a whole bunch of tools. There's a product we have called Decile Base. Basically, my team and I have answered thousands and thousands of questions about practically everything business related in venture capital. You're going to be able to sort of ask the AI. The AI is going to be able to answer almost all of these questions. It's trained only on our data. It doesn't search the internet or anything like this. And then, of course, our team is also available to answer your questions. So basically, we're able to kind of get your questions answered super fast, and that also reduces the time to market for you. Okay, and so at this point in time, the VC Lab kind of program and system has become more or less the way that new and emerging managers start firms. It works really well, has an incredibly high NPS, usually in the high 80s in every single cohort, even though it's a free program, right? It's pretty profound. And just to kind of give you a sense of like comparables and things like this, right now I think Kaufman Fellows is roughly $80,000. You know, um, Cool Water is in the $20,000 to $30,000 range, right? And they don't have as good of results, right, as our program, which is free, right? And you're closing on that. Now, the difference is that there's a quality filter with what we do, right? Because we don't have this sort of kind of incentive system that many other programs do, right? And so with us, you have to close in order to complete the program, right? So this is a closing program. It's really good at doing that. If you're coming in for other reasons, then it might not be the best fit for you, right? So we sort of self-select for the results that we want to see, which is people that are going to launch during venture capital firms. So I see that there's some questions coming into the Q&A. Before I do that, let me just add one last thing here and kind of move forward with some of these questions. As we begin to sort of scale out the entire operation, so in case you don't know or see, we're sort of kind of operating at scale now. Like most of the market at this point comes through our programs or some derivation thereof. We're going to start, introducing more and more premium offerings. And so, for example, many of you right now have gotten an acceptance letter from us to get into VC Lab, and we're still waiting on you to confirm. You should confirm, right? Because in the next cohort, if you sort of wait till cohort 16 or cohort 17, we're going to start, charging for the program or things in the program. So this might be one of the last sort of opportunities where we allow for that to happen. So come in, right? Come into the program. Let's get this done. Let's get your fund closed. Because again, like I said, like if you sort of look at where the market is and what we're doing and the results and everything, we're producing much better results already basically for free. So, take advantage of it. Okay. Lots of questions coming in right now into the Q&A. Everyone, there's a Q&A button right below the chat. So you can see that there's like a thing with like kind of 4 boxes at the top right. Then there's like the chat, and then there's like a thing with like Q&A. I'm looking at that Q&A right now. So if you have questions, ask those questions. There's also an upvoting mechanism that's pretty cool. Like you can see the little arrow that goes up. Let's go ahead and get your questions in, and I'm happy to help. There's a question here, and it's, I read the main qualifications: access to large amount of accredited investors and a lot of time to get things kicked off. My understanding is that you will fast track us on raising and closing. How many closes does a person make? So I you know, every firm is different, but most funds, I would say at this point, do anywhere between 5 to maybe 10 closes, depending on where they're at. Some will do 3. The reason that people do less closes is because it costs money to do a close. You need law firms and things like that to sort of be involved. And so sometimes people just want to bunch up closes just so that they can get better return on investment per unit of time spent. One of the cool things with, I would say the back office offering that we've created is that, it's all flat rate, and you get unlimited amount of closes as part of that, so that you don't have to worry about that. So a lot of the funds that we power end up doing a lot more. So hopefully that's helpful here. There's a question here on kind of what is the how do we schedule one-on-one with you, since we have a venture studio hybrid model that's currently underpins an accelerator? So once the program starts, which is on Thursday, and you've been enrolled, what will happen within, let's call it a week or two, is we're going to start offering office hours. The first set of office hours is going to be group office hours, because I want to make sure that everybody's thesis is right on point. Because if your thesis is not on point, there's no sense in you discussing like a lot of the structure kind of questions that you have, to be fair, right? Because if the thing's not viable, the thing's not viable, right? So we're going to focus on the thesis first. Then as time goes on, we'll open up more office hours and things like that. We also have, again, if you haven't taken a look at Decile Base, go to decilebase.com, and you can ask a lot of questions. There's an entire article dedicated to studios and how to build them. But let me be very clear. If you're spending time on structure right now, and you don't have at least 1 to 2 million in hard circled like letters of intent signed by limited partners, you're doing things out of order, and you're wasting time. Like, your return on investment per unit of time spent is going to be really, really low. So if I were you, and if you don't have that, so signed letters of intent from limited partners, I would just not spend any more time on structure, and I'll spend most of the rest of the time on thesis trying to get those signed letters of intent. You do not need to talk to limited partners about structure. They don't care about that much. It's all about why you're going to be able to sort of succeed, okay? So that's what I would do if I were you, Jehuri. All right, let me sort of like refresh these questions here. Okay, is it still possible to apply for the upcoming cohort? Yes, you can still apply right now, and email programs@decilegroup.com, and then they'll sort of expedite that. I'm not part of a VC fund. Yeah, and if you're a founder on this call, this is not appropriate for you. You should not, this is not going to be valuable. You should leave this call, because this is not what this is about. This is for founders of VC firms. I see a calendar invite for Thursday, but no other dates. Will there be a meeting on 4th of July? There will not be a meeting on 4th of July. We sent out the dates kind of a week or two ahead of time. David, what ends up happening is that, people, people sometimes will not make it through the rest of the program. They may drop out for various reasons. Like, for example, they can't hit the metrics that we need them to hit. or they have a life event or something like this. So we generally do not send out calendar invites with Zoom links for every single session for like 14 weeks because of that, right? We do not want people that are no longer in the program to come to your Zoom session, if that makes sense. So hopefully that's helpful here. What's the average size of a person for the raise amount? Look, it's no different than every other VC fund. Okay, like right now, the average fund for a VC fund that's a new manager is roughly about 10 million. We in the accelerator are going to try to drive your fund size down to hopefully in the 5 million range. Some of you are going to fight us on it. That's fine. It's your fund. We can only give you advice. But again, most of the LPs that are available just don't back new managers, right? And so, just set your ego aside, get fund one off the ground, and then get to fund two as quickly as possible. Okay. The best funds of our time almost all started small. Initialized capital was like $6 million, and they have billions under management. Felicis was $4 million. Now they have billions under management. And they did that pretty fast, like in like 10 years, lowercase $7 million. Altimeter, right? I think his first fund was like 5 million, right? Okay, and now it's like one of the largest. It's a huge fund, right? With investor relations and everything, like billions of dollars, right? So the small is good. Don't allow ego to get in your way with regards to fund size. Your font size is like your minimum target, not your aspirational goal. A lot of people make this mistake. They end up undersubscribed, and because they ended up undersubscribed in fund one, guess what's going to happen in fund two? All the LPs are going to write in their deal memo, hey, this person has fundraising risk. Do you really want to deal with that? It's already hard enough as it is to raise a fund, right? So don't do that. Just oversubscribe, okay? What is the best way to position yourself as a new VC with regards to social media? No positioning, zero. Like, you cannot talk about anything that you do on social media. That's general solicitation. That's bad. We can put a general solicitation article into the chat for everybody, but no, do not talk about your fund publicly. Do not talk about your thesis publicly until the entire thing, 100% of the fund, is fully closed. You cannot talk about your fund publicly, okay? This is a huge problem, okay? Do not do that. You're going to get in trouble. And depending where you are in the world, these laws are serious, like serious. Like in Europe, you can go to jail for doing stuff like this, okay? So, don't do that, okay? Will you cover a fundraising model for a venture studio? So yes. But for all the studio people, because I see there's a decent amount of people asking stuff about studios. Okay, there's two types of studios out there, right? There's one model, which is where you have basically a holding company, and you raise money into that holding company, and then you use that to fund companies. That's model number one. And then model number two, okay, that's where that's the scalable, enduring model. I would say at this point, this is what you see Atomic and Science and those kinds of folks do. And what they have is the holding company, and then they have an entire VC firm, the entire VC firm with all the three entities, Manco, GPLP, all like connected to that, right? And they're using that money to fund those companies, okay? We can't help you with model number one. So if you are not planning to, if you're doing a studio and you're not planning to raise a VC fund that complements that studio, this program is not a good fit for you, and we can't help you. Okay. There's nothing wrong with option number one. This is not to say that your approach is wrong. It's just to say that we're not set up to help you, because we specialize in people that are in helping people raise venture capital funds or build enduring venture capital firms. And so, you got to think about like what you're trying to do. And if, maybe the time is not now, but you're going to raise a fund later, then just apply for a future cohort. But we're just not going to be able to help, for those folks that are not building a VC firm. There's a question from Rebecca. It's basically kind of like, what do you look for in admissions and things like this? In order to be able to build a successful and enduring venture capital firm, not a fund. Okay, so this is again, if you want to build a fund, programs again probably not a good fit. But if you want to build like a venture capital firm, like an enduring one, that you're going to do this for the rest of your career, so you're committing yourself for the next 10 to 20 years of your life doing this. There's a couple of things that you need. Okay, one, you're going to have a ridiculously strong network. Venture capital is a network business, right? This is how you access deal flow. This is how you access LPs. Most of the LPs that are going to fund your fund one are going to be people in your first degree network or the networks of your first degree network. Effectively, it's not you're not going to have some random individuals coming into your fund that you don't really know or you don't have some sort of connection to. Is possible? Is that possible? Yes. Uh, I'm just trying to help you optimize for the conditions on the field, right? And so, you can optimize for being an outlier and getting maybe some random people, but the most likely scenario is that you're going to raise it from like networks and networks of networks, right? So one of the things that we look for in the application is to make sure that you have a super robust network. Two, we look for like what I call GP thesis market fit. Like, I don't know, if you're if you're starting a fund that's investing in it's called a deep tech, and you spend your entire career you know in, I don't know, in marketplaces or marketplace companies. It's kind of weird, right? I don't see what your secret sauce is going to be to allow you to really perform well on that thesis, versus these hundreds and hundreds of other general partners that are launching right now, right? It's just tough, right? So we look for some of those things, and then obviously the program will test this out, but you're going to need an enormous amount of grit, because everyone here that wants to launch an enduring VC firm, right? You're going to pitch 2, 3, 400 people, and like, I don't know, you're going to get 350 no's, and that's pretty hard, right, to deal with in general. And so, you just got to have the grit to kind of persevere, because this is what you want to do with your life's mission. There's a question here from Nilton. I'm an associate. We're raising a small fund for portfolio companies. I'm working closely with the two GPs to set this up. Given the scenario, would it be possible for me to apply? No, you need to bring in your GPs. This is a program for managing partners of VC firms, and just a little word of advice to the GPs that you're working for, Nilton. They need to do this work, period. Because the investors, no offense to you, right, but the investors are not backing you personally, right? They're backing the two GPs, because those are the people that are going to manage this fund for the next 15 years, right? Which is a huge commitment. This is why it's so much harder to raise a fund than it is to raise money for a startup, right? You're backing people, and you have to hope that these people are going to manage your money really, really, really well for like the next 15 years, right? And so they're going to have to be in the program and apply, okay? Does your back office service also support and facilitate syndicated fund closes? I don't know what a syndicated fund close is, but generally, yes, the whole point of having a back office kind of product is to help close LPs and do that really well with the right kind of compliance metrics and things like that, so you don't cut corners, so and all that. So yes, it does that, but I don't know what a syndicated fund close means here. What do you advise if you have two other GPs building the fund alongside you currently are unavailable to commit 14 to the 14-week long sprints? My advice is that you're not committing to the 14-week sprints. All the accelerator is that it's a tool. It's a tool to get you closed. There's nothing in our deliverables that's like busy work. It's not like, hey, go read this to learn about this, and this isn't school. If you want school, you should just do Kaufman Fellows, right? Or Coolwater or something, right? This is like a closing program. You're gonna follow the process, okay, and you're going to go out and like close a fund at the end of it. And all we're doing is packaging the things and having you do them correctly while preventing a lot of major mistakes that we see happen on a regular basis where people run into trouble. And that's why you have this whole entire thing. So what I would tell your GPs is that if you all want to close a fund this year, which is basically what this program is going to be about, they're going to have to put in the work, period, right? This isn't like extra work that they have to do for the accelerator. This is work that you all have to do. And I would tell you that it's the best thing for you to do is to get them into the program together with you, because the program is going to stress test your relationship. Okay. And this is the thing with funds that are different than like startups have these like nice cap tables and things like this that can you can exit out a founder, if necessary. It ain't going to work like that with the fund. If one of your partners quits, like after you say you do a first close, it basically means death. Okay. It means death to the fund. Your LPs are going to be upset and all this stuff. This is why you want to test out your relationships and these with everybody before you begin a first close, before you hire a law firm and try to set all this up and negotiate and all these things, right? Get the commitments together. And you can use the program to stress test these relationships and to see if, everybody that is a GP right now is as committed as you for the next 20 years of their lives to build an enduring venture capital firm. And if they're not, all good, find out sooner, maybe make them a VP, a venture partner, instead of a GP. In fund one, and maybe in fund two, they can get promoted to a GP later, right? This is why you want to do this now. Okay. As a matter of fact, if your partners aren't joining you, it's almost like a red flag in a way. This is how you sort of want to think about this. So for everybody on the call that has partners, it's in your best interest to get them into the program because it'll help you figure this out. The last thing I'm going to say is, you're going to like grow like this, right, in the program. Everybody else on your team is going to stay right here. So what's going to happen? You're going to have to explain to these people all these concepts. Like, why are we only doing a $5 million fund size, right? Like, no, we should shoot for $50 million and all these kinds of things. It's like, because they didn't go into the program and didn't understand the logic and why and all this other stuff. Why are we not speaking with these fund of funds? It's like, well, because what I learned in VC Lab is that these fund of funds are never going to give me any money in my fund one, so I actually got to focus on these other kind of LPs that look like this, right? Those things you're going to just have to constantly re-explain to all your partners over and over and over again, right? And so it's not ideal for that perspective either. Okay, so hopefully that's helpful. Okay. Closing an anchor takes more time. There's no such thing as anchors anymore, Camila. Okay. Like that used to be a concept like back in the day, that you would have sort of like an anchor that would sort of stake you and all that. Like fund ones are not raised using anchors anymore. So as a matter of fact, there's not a single thing that has that causes more failed funds and failed closes than an anchor. Okay. Because you end up spending all of your time because they're like promising you millions of dollars, and then they back out at the end, and then your closing fails. Okay, this happens all the time. So it's actually this is again one of the things that we solve for in the program, because we tell you not to waste your time there. Focus on the people that can come in now, which are usually high net worth individuals coming in at smaller tickets. You're going to be able to come in much faster and close them. But seriously, there's an inverse correlation between anchors and closing funds now, because it's such a complicated thing. And like I said, most fund ones just don't have anchors. Even fund twos don't have anchors. So I would just not waste a lot of time there right now. Okay. Is it a hard requirement to have a video element of our application? Yeah, of course, right? Like we're trying to help people, and we want to make sure that you're a person that is like backable by LPs. And so, just get your video in, right? Like that's a huge part of the application for that reason, right? Like again, in this world, people back people. It's like an investment in a person. It's not an investment in like a company. Okay. All right. Okay. What is VC Lab's approach to unconventional disruptive fund theses? Um, I don't really know what that means, honestly, but I can tell you this, okay? And again, I'm trying to help you win using under the conditions that you're faced with right now, right? The whole point of this program is for you to have a closing basically before the end of December, right? So we're optimizing for you closing like right now, okay? So what does that mean? Well, look, if you're trying to deviate from what are already basic accepted standards, you're going to fail, right? So, like, I see a lot of people try to, for example, innovate on structure. This is a huge mistake. Okay, it's already hard enough. Like, I've already kind of spent this whole call talking about like this is really hard. Like, they're backing you. Most LPs are prevented by charter from backing you, though. So you have even a smaller pool of LPs, and now you're like introducing a whole nother thing. Like, I'm not going to do 2 and 20, and my thing is going to be like a evergreen fund or whatever the hell that is. That you're gonna fail, right? Like, because now instead of, it's already hard enough to just get them to buy into you doing a more traditional structure with a thesis, then now you're introducing all this extra layers of complexity. You're going to just make it ultra 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 hard for you to close a fund, right? And so, in fund ones, you don't really, and especially and even in fund ones and fund twos, don't innovate on structure. Once you get to some level of scale and you've proven yourself with real track record, and track record, by the way, is not your angel track record, not your syndicate track record. At least this is how LPs see it. Okay, this is not my point of view. It's just how LPs see it. It's like the investments that you made in funds in the fund that you've managed, right? This is why a lot of people that spin out of like really famous firms really have a pretty hard time managing their ego in a process like this, because again, what happens in that situation? You spin out of a firm, you think you should go out and raise $100 million or $50 million because you feel like it's beneath you to raise five or whatever, 10. And you go out and start pitching all these LPs, and then they start asking you about your track record, and you can't talk about it, right? Because it's not your track record. Like, if you worked at a VC firm, that's not your track record, right? It's the VC firm's track record, and you can't take that with you unless they give you permission, they give you attribution for it. So you don't have any track record, right? So now you're starting kind of from scratch, and it's a really, really tough slog, right? So the best way to get track record is to do a fund one, super fast, super small, get some wins under that, then go to a fund two, super fast, maybe a little bit bigger, not too big, get some wins with that, and then go launch fund three. If you do it this way, you're going to have more assets under management faster than if you go out and try to raise, like, I don't know, $50 million like right now. Like, it's going to be way faster this way. Okay, there's a couple questions about just acceptances and things like this. Everyone, you got to just check your email for that. We've emailed everybody, and if you got an acceptance email from us, you got to respond, and you got to share the Mensarius oath, because we only want to work with ethical individuals that want to build enduring VC firms. That's why. All right, I'm going to do one more question, and then I want to go ahead and switch over to the networking sessions. So there's a question about, basically, have you seen a solo GP join a program then launch with other solos in the program? That is super dangerous. Okay, that is a hard no. You cannot partner with people that you don't know. Okay, this is not like a startup, guys. This is not like a startup, right? Like, again, if the fund breaks up, it's death. Okay, this isn't like a vesting schedule or anything. So no, and it's okay to be a solo GP. 66% of alumni are solo GPs. Many of the best enduring firms that you look up to started out with one solo GP. They tested out a whole bunch of people under a venture partner agreement, in fund one, sometimes in fund two, and then they promoted some of those folks to a general partner and eventually managing partner. Do it that way, okay? You cannot afford to start a fund and break up like really early in the process, because if you do that, you're in a really deep trouble, right? And you're going to be managing these people's money for 15 years, right? And so if you all break up, and then it's just like an absolute mess, right? So don't do that, right? But if you are thinking about testing some people out, put them into the program together with you, okay? Do we need experience in VC firms at all? No, you do not need experience in VC firms to do this. And there's a question about like, can you elaborate the difference between Kaufman Fellows and VC Lab? Kaufman is like a learning program and a community. Okay, VC Lab, you're going to close a fund. There's no theory whatsoever. You're going to close a fund, and it has a higher NPS, and you're going to get your fund off the ground much faster. It's like, you know, Kaufman is like a place where you kind of have community, get curriculum to learn about like how to invest and things like this, and it's cost $80,000, you know, as well. But if you're going to start, if you want to start your own VC firm and you want to close on that fund, VC Lab is the way to go. All right. So hopefully that's helpful. All right, everybody. Let's go ahead and shift over to the networking session. So I'm gonna come off the screen. You're gonna see a set of tables. I'm going to have my own table for more VC Lab questions where you can sort of come in and unmute and ask me some questions. And then we can sort of riff on that for the next 19 minutes. Get your applications filled in, and because we're starting on Thursday, if you have that, or if you haven't responded to our emails, you got to respond now, because we're going to start here on Thursday. All right. See you on the other side, everyone.